This week I attended an interesting presentation about the Perth Greenfield land sales market run by UDIA and presented by Colin Keane of Research 4. So WA has experienced three major peaks in annual lot sales over the past 10 years. In 2014, where there was 11,800 lots sold, 2020, where there was 10,770 lots sold, and 2024, where there was 10,164 lots sold. So the long-term average is running around 7,860 lots per year, and we're currently running at 8,950 lots for 2025 when you annualise the Q1 results, which is about 10-15% above average, although that's still a fairly significant drop from last year. Lot sales are also trending down on a quarterly basis, and so whether we get to the 8,950 by the end of the year or not remains to be seen. So it is a healthy rate at or above the average for the last 10 years, but it won't go far enough to achieving our targets under the government's National Housing Accord target. Colin noted that each upswing has been sparked by different conditions. So in 2014, there was strong domestic demand and steady local economic growth. It was the leftover from the mining boom. In 2020, there was government stimulus, returning expats and surging interstate migration. And 2023-24, there was record numbers of temporary visa holders, more migration and a sharp investor response. So as a result of the influx of migrants to the state, investors responded with their loans as a share of the total lending jumping from around 5% in 2019 to 13% in 2025. On the other hand, first home buyer numbers have stabilised over the last 3 years, hovering around 4,000 loans per month. Market confidence remains solid. So Colin noted that the returns rate, which is the share of sales that fall through, peaked at 29% in 2022, and this was presumably due to overzealous first home buyers taking advantage of the grants and eventually getting turned down. But this has now dropped down to just 7%, much better than the typical 15%, which is seen in a balanced market around the country. Colin did raise one concerning data point about the maturity of current land estates. So 42% of estates in Perth are 90+% sold, and this compares to 21% nationally, so it's double the national rate. And only 12% are considered emerging, which is only 0 to 30% sold, compared to 25% nationally. So again, half the national rate. This imbalance suggests we're heading towards a supply shortage unless new estates come online soon. The performance of the Greenfields land market sets the tone for surrounding commercial development. So stable sales at a good rate, low cancellations and tight supply create a foundation for town centres and commercial property to continue to grow in these Greenfields areas. As previously reported by Urbis, only 19% of apartment projects that have received planning approval in the last 5 years have commenced construction, which is a very low number. To me, the tighter supply of greenfield lots moving forward may lead to higher pricing, increasing the appetite for apartments as a more affordable alternative. As I previously said, I'm talking to a lot of developers who are saying their infill apartment sites they've held for a few years now are now approaching a level of feasibility. And so I maintain that over the next 6 to 12 months, you'll see more apartment projects launch. That is obviously subject to the elephant in the room, construction costs and labour supply. UDIA and Colin do fantastic work in advocating for the development industry to help dig us out of this housing crisis that we're in, and I'd recommend talking to them more to learn about this.